Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. If you've been with us for a while, you know what we do here. But if you're new, let me just tell you what we do is highlight stocks that have earnings this week, okay? And we talk about the expected move of the stocks, where they're either going to be breakout stocks or quiet stocks. I'll give you the definition of what that is in just a moment, okay? But we discuss how to profit from these. That's what kind of sets this show apart. We talk about how to profit from these each and every week. So this week, the week of July 21st, 2025, we are getting into earnings season with over 400 companies declaring earnings. All right. Now, what's unique about this week is that many of these names are mega cap. Okay. So we have companies like Alphabet, we have Tesla, AT&T, Intel, many others. And I'm going to highlight these as we go through these. All right. So I'll talk about what I'm looking at this week. And because we do cover so many names, remember there's a chapter feature at the bottom of this video. So you can, jump ahead or pause if you're watching the recording and just see what we're talking about when it comes to Tesla or Google or, whatever other earnings that there are this week. So I'm also going to cover the trade that we've had open for a while. We closed that out last week because it expired. And then also our trade from last week was just a very short couple of day trade. And I'll show you how we did on that one as well. So let's just sit back, relax, and we'll get into it right now. All right. So as I bring up our list for our earnings this week, this is not an all-encompassing list. I focus on certain stocks that have either the most dramatic expected move as far as a potential breakout, and those that are really quiet, those that aren't expected to move. So those that are kind of in the middle, you're probably not going to see many of those here because we do have a lot that are very dramatic on one end of the spectrum or the other. So how I have this sheet broken out is on the left-hand side, we have our potential breakout stocks. These are stocks that have expected moves of well over 10%, many of these stocks. So double-digit potential movers on the breakout stocks. And then on the other side of the ledger, we have our quiet stocks that really aren't expected to move very much. And we're talking about single digits, many of them at 5% moves or below, and they just aren't, they just don't move very much. So we have different strategies for that and different strategies for our breakouts. And I'll talk about those as we go through this video. Okay. So let's jump into the list a little deeper here. Let me show you an example of our quiet stocks as we begin with that list this week. This is an example of Pfizer. Now, Pfizer does not have earnings this week, but this is a historically quiet stock. You can see through the past 5 earnings cycles that this stock moves less than 5%. In fact, the stock hardly moves even when it's not earnings season, okay? It just putters right along and trades sideways. For these types of stocks, what we like to do is sell option premium going into the earnings event, okay? So we like to take advantage of high implied volatility, sell that implied volatility, and wait for the volatility crush after the earnings announcement, and that's how we make money from the trades. We do trades like iron condors as an example. Okay, so selling premium, always hedged. We never sell naked options, but we're going to do something like an iron condor on a stock like this. So let's take a look at our list this week on our quiet stocks. And we've already had some earnings today with a Verizon and Domino's Pizza declaring earnings. Okay, and then after market close today, we're going to have a BOK Financial. And then, as you can see, we get into the into the week. But let me take you to the charts, and I'll show you these moves. Okay. Now, for some reason, I have a little data issue on Verizon. They are up today. They did declare this morning, and the move right now, it is trading higher by 4.8%. So it is right there at that estimated move. And again, how do we get the estimated move? That's where the option market makers come into play. They are the ones that price this out, and we see what the estimated move and compare it with the historical move and see if we have an edge in a trade. Okay. So Verizon did come out this morning, and they are up 4.8%. on that. And Domino's Pizza also came out today. And look at this. You can see there's a little bit of volatility here. But remember, this is a $455 stock. Okay. So that looks like a big move. But you can see here, it's only down by 2.29%. So the expected move was a little less than 5% on it. And that is its average move. And true to its historical pattern, it's only down 2.29%, even though it showed a little volatility today. So remember, this would have been probably a very solid candidate, being a $500 stock, to do something like an iron condor on. We have lots of opportunities there. Okay, moving on through our list. After market close today, we have BOK Financial. All right. And the banks and as a whole have all been doing pretty good. But through the actual earnings event here on BOK, we haven't expected move less than 5%. Okay. Now, this is a $100 stock. This would also be a good example of a stock that, or a company that we have an opportunity to sell option premium, because these triple digit stocks, $100 and above, the option premium is often elevated a little bit because it does have so many strikes, and this would probably be a good opportunity if the pricing is there. Okay, we sometimes see that things get too quiet and implied volatility doesn't rush into these, and we don't have that opportunity. But BOK could be one of those. All right. So moving on through the week, we move to Tuesday. Texas Instruments, I'd like to touch on for just a moment. They will declare aftermarket close on Tuesday, the 22nd. The average move here is about 6%. Okay. So on the mid range of our quiet list here. And as you can see, Texas Instruments has really rallied nicely. Okay. From a low of 140 back in April to 220 now. This has really caught a nice bid. We're not really worried about the long-term move. We are just worried about the move through the earnings event. And this is a single-digit move here for Texas Instruments that's being priced in as well. So speaking of quiet stocks, here's Coca-Cola. And just look at this chart. I mean, look at the scaling here. It's already priced in $1 increments. So if I pull this down, there's a 250 increment. I'll pull it down to where it's at $5. Okay, there it is. And you can just see how quiet Coca-Cola is. Just look at that. If that was an EKG, I'd be very concerned here. But they do have earnings before market open, actually tomorrow, and the expected move here is about 4%. $70 stock, there might be some opportunity there. If you could sell, more than 5% away from the money, maybe getting closer to 6 or 7% away from the money, meaning higher or lower, that might be a good opportunity on Coca-Cola. But sometimes, again, the pricing might not be there. Last time I checked, I didn't really have a good trade on Coca-Cola, so we have not put that on for our subscribers. Speaking of which, we do have a publication that talks about these a lot, and that is our Delta Neutral Income portfolio for these quiet stocks where we sell this option premium. And I put out trade alerts pretty much each and every week on what stocks do have that type of opportunity. Okay, moving on to Alphabet. Now, this one is of particular note because it is a Nasdaq stock. Okay, they declare on Wednesday, the 23rd, after market close, but the average move here is less than 7%. So really, I'd focus on what a lot of these Nasdaq stocks, and we're going to talk about several here, that really could be drivers of the Nasdaq as it makes new highs today. Okay, Nasdaq making new highs today, and we'll see if Google will add to that on Wednesday with another potential move. But again, the big double-digit moves of Alphabet are in the past. Right now, this thing pretty much moves single digits through the earnings events, and that's what we expect again this week with a 7% move. Now, another one that's often on our list is AT&T, and you can see that AT&T is actually up nicely today, but that is not the earnings event. The earnings event is on Wednesday, the 23rd, before market open, and AT&T has a move of expected move of about 5%. Okay, now here's the thing. Look at this 28. This thing is in 50-cent increments here. If I scale this down to even $2.50, you can see just how quiet AT&T is. It's just going sideways. And so how do people make money on this? How do the stockholders? Well, they can't, but as option traders, we sure can. And there are certain strategies that we would deploy to make money on this with it just going sideways. Okay, so we'll be watching AT&T as they declare on Wednesday before market open, and again, an average move of less than 5%. Now, another former high flyer here, Chipotle. Okay, Chipotle will announce on Wednesday, the 23rd, after market close. Believe it or not, the expected move here is 5%. Okay, the just Chipotle just does not move around. It used to be another high flyer, double-digit moves on a regular basis, but as we get into the maturity of this company, you can see the last earnings announcement back here. We just had a couple of dollar jump, which was definitely not double digits. And with Chipotle now trading at $52, we expect again a quiet earnings cycle for Chipotle and a move of about 5%. Okay, so coming here, getting down to the last few of the quiet trades. Okay, Union Pacific will declare on Thursday, the 24th, before market open. And again, now this is a $200 stock, currently trading at 226 and change. And again, I like these. I like these. $200, $300 stocks. We can do wide iron condors usually on these. This has a move of expected move of about 6%. And you can see the last time it gapped down, but it rallied up and only closed down a couple of percentage points. So well within that 6% that is the average move of the stock. Okay, so Union Pacific, it's on the quiet list. I would definitely look at iron condors. And essentially, if you don't know what that is, that's an option strategy where you sell a call spread above the price and you sell a put spread below the current price. And that is what we look at doing here. Now, a stock that's close to me, meaning their corporate offices are actually walking distance from me right now, is Keurig Dr. Pepper. All right, so they declare on Thursday before market open, and the average move here is less than 6%. And you can see the scaling that came in. I've already been crunching it down. Here's a $1 increment. Let's see if I can get to 250. There it is. And you can see that this is a very quiet stock. And here's the previous earnings announcement, and it just moved a little bit. And again, if this was an EKG, I'd be very concerned. Okay, so it's a $33 stock, and again, a move less than 6%. So closing out our quiet list for this week is HCA Healthcare, and they will declare on Friday morning before market open. That's the 25th of July. The average move here is 6%. And I showed you this stock because, again, I like these $2, $3, $1, $2, $3, $400 stocks that have lots of option strikes available, and we can do some great trades through them. You can see the last earnings announcement. The stock did drop a bit, but still well within that 6% range that it typically moves. Okay, so that is our list of quiet stocks for this week. And again, we have a publication called Delta Neutral Income, where we actually publish trades on these types of stocks. And I show you what that iron condor is. We manage the trade, and we take a look at the results each and every week. All right. But now on to our list of potential breakout stocks. Now, these are the exciting ones. Okay. Now, I think the quiet ones are exciting, but people in general like the really movers. Okay. The ones that really get the attention of the media, the double-digit potential movers. You can see that we start today with Agilysys and MedPace, names that might not be too familiar, but those two are real movers, as I'll show you in a moment. Tesla and Hasbro and Intel are all on the list, and there might be some names on here that you might not recognize, but make no doubt about it, they are a mover. So what does a moving stock look like? Okay. This is a stock that I'm going to show you here as an example. This is Akamai. All right. They do not have earnings this week, but you can just see where I've highlighted the earnings, the past 5 earnings cycle. This stock moves, okay? And it is a great stock to trade. What types of strategies do we utilize here? Well, we use Straddles and Strangles. Now, the great thing about Straddles and Strangles is that if you don't have a margin account, these are the 2 strategies that you can utilize, okay? Because you're not selling any options. You're just buying a call, buying a put, okay? Now, a straddle is buying at the same strike price, and a strangle is buying at 2 different strike prices, but you're still buying a call and buying a put, okay? All right, so let's take a look at our list for this week, and there's going to be some familiar names and maybe some not so familiar names on here. Okay, the not so familiar names are today. Like I mentioned, Agilicis and MedPace. On Thursday, you have Scholastic, which are the book people. Okay, believe it or not, they're on the volatility list. Amazingly enough, Booz Allen Hamilton on Friday, but let me talk about the stocks that I'm going to highlight here for you. And we are going to begin today with Agilicis because I love this chart here where this particular stock, now they declare aftermarket aftermarket close today on the 21st. Okay. This has an expected move of 16%, greater than 16%. That is the average move of this stock. And I love this consolidation pattern going into the earnings announcement. You can see the last earnings announcement back here on this particular stock. This was a big move for Agilicis, and that was 22%. Okay. Now, I just priced out trades on this today, and well, here's the thing. They're right at 17%. That is the expected move, current expected move of the stock. And that's where the options are priced. So we don't really have an edge in the trade. Okay. The edge in the trade came back here, when they were maybe forecasting a 15% move and the stock moves 22%. That's when we have our winning trades in that example. Okay. So this is a big mover. It's fun to watch. Put it on your watch list. You can see what it does after market close today, but we expect a big move from Agilicis today after market close. All right, so then MedPace here, also look at this, a $300 stock. Now, this is also in somewhat of a consolidation pattern here. This stock has an average move of 13% through the earnings announcement, okay? Here's the last earnings announcement. It popped down, but then rallied up during the day after the earnings announcement. And that was a good trade early in the day, but as the day wore on, you did not want to hold on to that. But here's the problem. This is a $300 stock. Okay. Now, while I love these for iron condor type trades, here we're expecting a double-digit move. And what you want to usually do is try to do a straddle or strangle on this, but they're going to be expensive. They are going to be cost prohibitive for a lot of traders that if you don't have a big account, this will be hard to trade because the straddle or strangler are going to be up around $3,000 or $4,000 per straddle or per strangle. Doesn't mean you can't make money with it, but you do need a larger account. Okay, so let's move on here. We have Enphase Energy coming in tomorrow after market close. This stock historically is a mover. You can see even during non-earnings event, this stock gaps. Okay, and look at this pattern. It gaps down and then rallies up. Gaps down, rallies up. Okay. Now, those were not earnings announcements. Here's the last earnings announcement. It gapped down, traded sideways, traded a little lower before it started to rally. All right. So we're looking for a big move on Enphase, double digits of 15%. This stock typically moves. So this is also a fun one to watch. So again, they have earnings tomorrow after market close with an average move of 15%. Now, believe it or not, toys still make noise. Okay. Hasbro has earnings on Wednesday, the 23rd, after market close. This stock, believe it or not, even though this is a mature company, moves double digits through its earnings announcements. Okay. So it has an average move of 12% through its earnings. And its last earnings announcement, which was actually right here, that was the last earnings announcement. Let me just put a little marker there. Okay, right there was the earnings announcement. That was a 14.2% move for Hasbro. Okay, so we're still expecting a big move. Also, one that when it begins to consolidate like this right before earnings, I really like that because that's a potential breakout, and those are good for straddles and strangles if you give yourself enough time. Okay, so let me touch on another one that everybody's watching this week, and that's Tesla. All right, so Tesla currently trading at 329. It has been rallying here nicely over the past 2 weeks. They declare on Wednesday, the 23rd, after market close. I did want to include Tesla just because, again, it's a Nasdaq stock. It's going to all eyes are on it, but again, it's right there at 10%. Okay, so it's on the verge of becoming a quiet stock. Okay, but it still has that potential for big moves around earnings, and that's why we keep our eye on Tesla. Okay. Um, so if you can get a straddle or strangle where your pricing comes in at maybe 7 or 8%, that's the required move to make money. As long as you give yourself enough time to be right, that's where you want to be on a stock like Tesla. Because if you price out a straddle or strangle and you measure out the break evens and you see, this stock needs to move 12% after the earnings announcement to make any money, well, then that's where the option market makers get it right. I mean, they're pricing in a certain move for a stock, and they are amazingly correct. Okay. So be very careful with Tesla if you're going to try to do a straddle or strangle on it. But we could get a bigger move. You could even, being a $300 stock, do an iron condor on it, but you got to make sure that you're like 15% away from the money. If you can get any premium out there, you really have to go far out. Okay. Now, another stock that is always on our list is Decker Outdoors. Okay. Decker has just a historic, um, incredible average of consistently moving double digits. They will declare on Thursday, the 24th, after market close. The average move for Deckers, the average move after earnings event is 18%. Okay. And as you can see, since its last earnings announcement, which was back in May, and that's this drop right here, okay, the stock has pretty much just gone sideways. All right. So that is a good indication of a potential big mover for Thursday is in Decker's Outdoor. And this one is consistently on our list for straddles and strangles. And we do these, believe it or not, there's a different publication that I publish called Delta Neutral Breakout. And we do just straddles and strangles in that publication. Okay. Now, Intel, another big name, all right, coming out on Thursday after market close. Again, that's July 24th. The average move here is right at 10% too. So, like Tesla, it's right there, becoming a stock that just used to move really big, and now it's not moving so much. So, what I do with these publications is I'm pricing these out each and every week. And sometimes you'll see a potential breakout stock like these double digit movers. And I am doing a sideways strategy on it because we just don't expect it to be as volatile as it used to be. Or conversely, maybe there's new information coming out and new potential for big moves. And we might have a quiet stock that is now back on our big breakout list. But it's all about where the option market makers are pricing these options. Okay. Now, Friday, I wanted to highlight a couple of others. Saya, I think that's how you pronounce this company's name. I've always struggled with that. They declare on Friday morning, okay, July 25th, before market open. And the reason why I wanted to highlight this company is because, well, they're a big mover. Their average move is greater than 16% through earnings. You can see their last earnings event. They were they opened the day at 339. Back here, or actually closed the day at 354, and then the next day they're trading at 245. Okay, that was after the earnings event. Okay, that's a big mover. All right, and we expect that. I love the pattern here. Just quiet as we come into earnings. This would be another one that I would look at for a potential breakout. And again, Straddles or Strangles, but again, this is almost a $300 stock. So this is going to be one for larger accounts. Okay. It just does require a larger account because a Straddle or Strangle here could be $3, $4, $5,000. And just because it's expensive doesn't mean it can't make money. It just requires a bigger account. Okay. And closing out our list for this week is Charter Communications. And who knew? Okay. But yes, this stock averages a 14% move around its earnings events. Okay. This stock is typically a mover. And you can see even without earnings, this stock does move quite a bit. Okay. And I love volatile stocks like this, but they declare Friday morning, July 25th, before market open. The average move here is 14%. And we see that potential for moves also with this earnings cycle as we come into a big week for earnings. Lots of names, lots of Nasdaq names. So that could really impact the current momentum of that sector. All right, so let me pop up our list once again, and you can get a snapshot of this. And again, this is just stock. These are just companies that are declaring this week. All right, so we're watching 86 companies this week. Okay, I highlighted a few of them here. Okay, but I'm covering even more each and every week, and I push these out to our subscribers as I see opportunities on them. Okay. So let's talk about opportunities because I give out trades each and every week here, and I want to do that again for you. But I want to highlight our past trades. Now, we've had a trade open for a month, okay, on Daktronics, and we finally had to close it out because it expired on Friday. And Daktronics moved up to the upper break even of our straddle, but then sold off. We were looking for a follow through and for it to go into the profit zone. It never did. But take a look at this. Even though this trade ended up down losing 25%, okay, of the value of the trade, okay, it was $50. Okay, we were down $50 in the trade on our exit. Yes, we were in it a month. We were looking for a profit, but unfortunately, we had a loss. Now, if you've been with us for a while, you know we've been on quite a run here and some pretty big winners. Okay, both especially with our breakout stocks, and then when we do sideways strategy stocks, we've also had quite a good track record. So when you have a loss like this, you want to keep your losses small and your winners big. So let me give you an example. Last week's trade was American Express. Okay. And American Express, we had a quiet stock. Okay. Even though the stock had rallied up here and you could see it consolidating going into earnings, we expected less than a 6% move for American Express. And so we did what is called an iron condor on this. Okay. So don't worry about the colored lines. Just look at the black lines here. That is the at expiration of our trade. You can see that we just needed it to stay in a range for this to profit. So how did American Express do? Well, let's take a look. We had a very nice result. Once again, we profited 36.6% on risk. Okay. So meaning the amount of money we had to put on this trade. That's a 36% return on risk in just 4 days. How about that for a return on investment on a stock that really didn't move? It moved a little bit and it moved down. It moved down from where we started on this trade, and we were able to profit $134 per spread. Now, if you don't think that's very much money, realize that if you did one contract of this and had a $10,000 account, that's a 1.34% return on portfolio in just 4 days. Okay. So that's the power of these. And of course, we were looking at doing a couple of these, not just one. We were looking at doing a couple of these and had very nice results on American Express. So what do I have in store for you this week? Well, as I do each and every week, I have another opportunity for you. And this was on our breakout list. So I'm going to focus on it because this is a stock that does pop around, and this is on Enphase. All right. This will be our breakout trade for this week. This will be a Strangle on Enphase, and interestingly enough, I'm going to go out an extra week on this and give myself 3 weeks instead of the typical 2 that I do. I'm going to do 3 weeks, as Enphase will have earnings tomorrow after market close, and then I just want a little time if it doesn't move the estimated move, okay? Because this stock does move around, and the extra time is nice. If it moves double digits and it moves 15% tomorrow, we will be taking this trade off and taking our profits and moving on to the next trade. So this is a strangle on Enphase. This comes in at about $480 per strangle right now. Okay, as of this morning, $480 per strangle, and so a very affordable trade, even with a smaller account. All right. So that is our show for this week. Listen, I appreciate each and every one of you, and for stopping by. I have a free gift for you each and every week, and it's available at the link that you see at the bottom of the video. And that is a guide on how I trade these really volatile stocks, okay, and how we do it. I give you the formula, and invite you to be a subscriber to our publication as we do these each and every week right here. So I talk about these earnings each and every week. I hope you enjoyed the content today, because I'll do it again next Monday right here. Everybody have a great trading week, and I'll talk to you again soon.